Imagine like owing the government more in taxes than like your entire net worth.
Oh, wow.
Even if most of that wealth is just like theoretical, just on paper.
Yeah.
Sounds kind of crazy, right?
Yeah, that does sound pretty wild.
Well, that's what some entrepreneurs are facing in Norway.
Really?
Yeah, and today we're going to take a deep dive into
Right.
this whole situation, and we're going to be looking at an article
Yeah, okay.
called Norwegian Entrepreneur Forced to Leave Due to 100% Plus Taxes.
Interesting.
And it explores how Norway's wealth tax
Okay.
has all these crazy consequences.
I'm intrigued. So what's interesting about this is that it's not just income tax, right? Like what we normally think about,
Yeah.
tax we pay on our earnings.
Ita.
It's actually going after the total value of all your assets.
Right.
Like even your house and stuff.
And even beyond that.
Okay.
Like even if you own a business, like it includes that too.
Wow.
And the article focuses on this entrepreneur in Norway
Okay.
who was actually forced to leave his country
Oh.
because of this tax burden.
Jeez.
And get this, he ended up on a government wall of shame.
A wall of shame. What do you mean?
Like literally.
Really? For leaving?
Yeah.
Wow. That's pretty intense.
Yeah, they actually call these people tax refugees.
Tax refugees?
That's what the article calls them.
Wow.
Forced to flee their country.
That's wild. Okay, so how does this wealth tax actually work?
Okay, so it's different from income tax,
Right.
which is like on the money you earn. Wealth tax is based on like everything you own.
Gotcha.
So not just like the cash you have,
Okay.
but also stuff like your house or shares in a company.
So even if you haven't like sold that stuff yet.
Yeah, exactly.
Interesting.
And that brings us to unrealized gains.
Unrealized gains.
Okay,
Nice.
this is like a key point. So it's like, let's say you own a house that's doubled in value,
Okay.
but you haven't sold it yet.
Right.
So you haven't technically made that profit yet.
I see. So
Yeah.
it's like theoretical money. You don't actually have it,
Right.
but they tax you on it anyway.
Yeah, and that's where it gets tricky in Norway
Wow.
because they tax you on that theoretical wealth,
Hmm.
even if you don't have the actual cash.
That doesn't seem very fair.
Well, the article gives this example of a startup founder.
Okay.
Like imagine your company
Yeah.
is worth millions
Mhm.
or even billions on paper,
Okay.
but all that valuation is like
Yeah.
tied up in the company.
Right.
You don't actually have billions of dollars.
Yeah, it's just like the potential value.
Yeah, and you might not have a ton of cash on hand.
I see.
But in Norway, you'd still be taxed on that whole valuation.
So you could owe a massive amount of money,
Yeah.
even if you don't actually have it.
Exactly.
Wow. No wonder those entrepreneurs feel trapped.
I know, it's like you're being penalized for being successful.
Right, even if it's mostly on paper.
Exactly. And this whole idea of taxing unrealized gains.
Yeah.
It's actually being debated all over the world, not just Norway.
Oh, really? So other countries are thinking about doing this too.
Yeah. Yeah.
It makes you wonder if it's really a good idea.
Yeah, it definitely raises a lot of questions.
Yeah, for sure. Yeah, so this whole idea of taxing unrealized gains, it's not just a Norway thing.
Oh,
It's actually been like gaining some traction in other parts of the world too.
Like where?
Well, even in the U.S.
Interesting.
The article actually brings up this proposal from Senator Kamala Harris.
Oh, right. I remember hearing about that.
And her idea was to tax unrealized capital gains.
Yeah, so basically the same thing as Norway.
Pretty much. And it caused like a huge debate.
Yeah, I bet people had some strong opinions about that.
Oh, yeah, for sure. I mean, some people were like, hey,
Yeah.
this is how we address wealth inequality.
Make the ultra-rich pay their fair share.
Exactly. But then others were worried it would like discourage investment
Right.
and hurt the economy,
Yeah, it's like a double-edged sword.
It really is. It's like trying to find that balance between,
Like helping society, not hurting the people who are creating jobs and stuff.
Exactly. And I think that's what makes this whole topic so fascinating.
Yeah, definitely.
Yeah.
It's like it all comes down to how we view the role of like taxation
Right.
and, the balance between individual wealth
Yeah.
and like the good of society.
Okay, so let's break that down a little bit.
Sure.
So on the one hand, you have people who are really in favor of these wealth taxes
Right.
because they see it as a way to like redistribute wealth and fund those important social programs.
Exactly, like education and healthcare and stuff.
Yeah. And it's like the idea that those who benefit the most from society
Yeah.
should contribute more to its upkeep.
Right, and that makes sense in a way.
It does.
But then on the flip side, you have the critics who say,
Yeah.
well, hold on, these wealth taxes could actually have some unintended
Like
consequences.
what happened in Norway.
Yeah, exactly. Like when people feel like they're being taxed too much,
Right.
they might just pack up and leave, which is exactly what happened.
Yeah, they go find some place with lower taxes.
And then the country ends up losing tax revenue.
It's like trying to squeeze too much juice out of an orange.
Uh-huh. I like that analogy.
You end up with less juice than you started with.
Yeah, so it seems like wealth taxes might not be the perfect solution.
Yeah, it's definitely not a simple issue.
So what are some other options then?
Well, the article talks about a few alternatives.
Okay, I'm curious.
One idea is to focus on closing tax loopholes.
Okay.
So instead of just taxing all wealth,
Yeah.
you target those specific loopholes that mostly benefit the wealthy.
That makes sense, like deductions and exemptions and stuff.
Exactly. And that way you're kind of addressing the fairness
Yeah,
issue
right.
without discouraging people from investing or starting businesses.
Interesting. Okay, so what else?
Another idea is to invest more in things like education and job training.
Okay.
So it's like you're tackling inequality at its root.
Mm-hmm. By giving people the tools to succeed.
Right. It's a more long-term solution.
Yeah, but it could have a huge impact.
It's about like investing in human capital.
And creating a more level playing field.
Exactly.
Okay, so is there anything else?
Well, the article also talks about promoting policies that encourage broader economic participation.
Like what kind of policies?
Well, things like supporting small businesses,
Yeah.
fostering entrepreneurship,
Okay.
and creating an environment that encourages innovation.
Right, so this is not just about redistributing existing wealth.
Exactly. It's about creating more opportunities for people.
To generate wealth.
Yeah, give them the chance to build something for themselves.
So it's kind of like a shift in focus.
It is, and I think that's really important.
Yeah. But for our listener,
Hmm.
who might be feeling a little overwhelmed by all this,
Yeah.
what's the key takeaway here? Yeah, it really makes you think about, like, the bigger picture, you know?
Right. Like, what kind of society are we trying to build here?
Exactly. And the article even talks about this.
Right, is it?
Yeah, like how all this ties into the idea of economic freedom.
That's interesting.
Yeah, like in Western nations. And how too much taxation
Yeah.
and regulation could stifle individual initiative
Right.
and limit personal choices.
Can see that happening.
It's like you feel trapped.
Yeah, like that entrepreneur who left Norway.
Exactly.
He felt like he had no other choice.
Right. And it's like a constant tension between
Yeah.
wanting to create a more equal society,
Right.
but also preserving individual liberty.
Mm-hmm.
It's a tough balancing act for sure.
Yeah. I mean, on one hand,
Yeah.
most people agree that we need some level of taxation.
Of course, like to fund those essential services.
Exactly. Things like education, healthcare, infrastructure.
Those things don't pay for themselves.
Right. But the question is like,
Yeah.
where do we draw the line?
Right. At what point does it become too much?
Yeah. Like, when does it start to discourage people from working and investing?
And that's where things get really tricky.
Yeah, because it's not just about economics anymore.
Right. It's about values and priorities.
Exactly. Like, some people are going to prioritize social welfare. They'll say, hey, higher taxes on the wealthy.
Yeah.
That's how we create more equality.
Okay.
But then others will say, no. We need to prioritize individual freedom.
Right.
And if we tax people too much,
Yeah.
we're going to stifle entrepreneurship.
And limit personal choices.
Right. So it's like two sides of the same coin.
And I think the article does a good job of presenting both sides.
Yeah. I think it's more about making people think critically.
Right. Like, what are the potential consequences of different choices?
Exactly. Because there are no easy answers.
Definitely not. And like you said earlier,
Yeah.
even well-intentioned policies can have unintended consequences.
The Norway situation is a perfect example of that.
So as we wrap up this deep dive,
Yeah.
we want to leave you with a question to think about.
Okay.
What do you believe is the right balance between taxing wealth to fund social programs
Yeah.
and preserving individual economic freedom?
That's a good question.
It's a tough one, for sure.
Yeah. It's something we all need to consider.
Because these are decisions that affect all of us.
They really do. Thanks for joining us on this deep dive.
We hope it's giving you some food for thought.
Definitely a lot to think about.
And we'll see you next time.
See ya.